Hello, everyone. It is November 2nd, and it's about 9:30 or 9:40 in the morning. And I just want to talk about a particular trading theme that we're looking at over here. When I say theme, I mean theme as opposed to idea. I guess I could say idea, but different people look at the same theme and come up with different trading ideas. In other words, the theme that I want to talk about is that it looks like there's a rally going on in the bond market, which is not surprising because we had a huge move lower. So, what do rallies and bond markets do? They push yields lower. So, here is our 10-year yield, and it was at 5% just 9 days ago, and now it's at 4.64. So, this is going to be very bullish for equities. All right. Higher interest rates are bad for equities. Main reason is because when a company has, all companies have to borrow money to operate. They don't just take the money out of the cash register. So when they're borrowing money, they have to pay an interest rate on it. The higher the interest rate, the more it costs them, and that takes profit right out of the bottom line. Then you have other things too, like there's competition. If the rates get high enough, people take their money out of the stock market and go into the bond market and so forth and so on. But anyway, now that we're seeing a reversal, it's could be bullish for stocks. I mean, this is a little bit overdone, so I would imagine there's going to be some kind of comeback. But anyway, take a look at this chart, and then let's look at our utility sector. Utilities are very interest rate sensitive, and sometimes we can find really good trading ideas in boring sectors. In a lot of ways, it makes sense, right? Everyone and their Aunt Mary trades options on Tesla, so the premiums are huge. Who trades options on Southern Company or Duke Energy? Anyway, when interest rates are moving higher, bond utilities go down. That's because people generally invest in utilities because they want income. So if they can get a better return or better income or a higher yield in the bond market, they're going to sell their stocks and go into bonds. Well, now that trend is turning. If yields start going down, people are going to start buying utility stocks again. Now, here is an interesting pattern. This is what we call our ascending triangle pattern. I don't really pay attention to too many patterns, but ascending triangles are pretty reliable, as are descending triangles. And think about it, every chart should be viewed through the prism of what does this tell us about supply and demand? Well, the supply side, the sellers, have been content to hang out up around here. They're like, yeah, just whatever. If the buyers come to us, we'll sell. If not, we're okay with hanging out and being patient. But the buyers, as time is going by, are getting more aggressive. You can tell because we have higher lows. Markets go in peaks and valleys. And when the valley forms at a higher level than the prior valley, we call that a higher low. That tells us that buyers are getting more aggressive. So you have complacent or patient sellers, and you have aggressive buyers. That sets the stage for a move higher. As a matter of fact, look at this. This is the opposite. This goes back to last year, but regardless, it's still a good teaching thing. This is the descending triangle. This shows patient buyers who are willing to hang out around here, but as time is going by, you're getting lower highs. The peaks are forming at a lower level than the prior peak. So descending triangles patterns tend to be bearish because they show us that there's aggressive sellers and complacent buyers. Sure enough, told us the move lower was coming. So here we are with kind of an opposite formation. Technical analysis has a bad reputation, and unfortunately, it deserves it because a lot of technical analysts don't really understand what it is that they're looking at. They don't understand this. Like, why would something rally off of support? Right? See, we get to support and we rally, we get to support and we rally. Well, it's because the buyers who are creating the support start to look around at each other and say, hey, there's a lot of other buyers here. If they're willing to pay a higher price, that's who the sellers are going to go to. So I better increase the price I'm willing to pay. And that sets someone else does it. Someone else does it. It sets a snowball effect into account. So this is why when things get to support, they tend to rally. All right. Anyway, what we can do is we can look within the sector. So remember, what we're looking at is the sector spider. This is an ETF that covers the entire sector. So it's the average of the sector. So there are going to be stocks within the sector that look like they might move more and look like they might move less. That's just the way it's calculated. So let's look at the sector ETF fact sheet. XLU, it's a spider, Standard & Poor's Depository Receipt. And here there are the companies that are. NextEra Energy is the biggest. It's got a 13% hold weighting of the sector. So let's just see if that looks like it's maybe an interesting trading idea. Yeah, right off the bat, look at that. A lot of times when a stock makes a rapid move through price levels, if it reverses, it can go right back quickly through those levels. You've probably heard the term gaps tend to refill. Well, there's a reason why there's resistance in markets, and it's because you get people who buy and the price goes lower, and a lot of them say, I regret buying. If it gets back up to the price I bought it, I'm going to try to sell. So you get remorseful buyers placing sell orders after the price goes lower. This is why if support levels can turn into resistance. As a matter of fact, you could even see it here. See how there was support here and then it became resistance over here. Remorseful people buy, the price goes lower. Some of them will say, I made a mistake. It gets back to my price level. I want to get out. If I can get out at break even, I'm going to. Wow, look how far back that support goes. So support can become resistance. Now, when you fall through levels really quickly like this, there's not a lot of time for there to be this large vested interest of people who bought are now remorseful. So I think there's a good chance that this could get up to here pretty quickly. Let's take a look and see what percentage move that would be if the thesis plays out that interest rates continue to go lower and utilities rally. All right, so this could be about a 10% return if things play out the way that they could, and they might. I mean, we got to just let the market tell us what to do. Next biggest company in the sector is Southern Energy. Now, if I look at this, this is kind of at an important price level. See how support became resistance? People buy and then they regret buying when the price goes lower. So support becomes resistance. So this is kind of at a resistance level. So I think that the upside here would be pretty limited. Next biggest company is Duke. It looks pretty good, I guess. Not as interesting to me as NextEra. I mean, if this gets to this former top, that'd be about 5%. And just going to go through a couple more here. Sempra, which is SRE, I believe. Yeah, Sempra. Same thing. Markets tend to find resistance at former tops because there are people who bought here who are going to be trying to get out at break even if we get back up there. So there tends to be resistance at former tops because of buyer's remorse. I don't really see much here. I mean, I think it could move higher, but I think your gains could be probably pretty limited, maybe around 3%. And I'll just look at one more. American Electric Power, AEP. And this too, I mean, look at this. This is pretty much at resistance. Actually hit it today. So the upside here might be limited. All right. So moral of the story is that if interest rates move down, there's a good chance utility stocks continue to move higher. This is the ascending triangle pattern, which illustrates complacent sellers, aggressive buyers. In any market, if you have complacent sellers or aggressive buyers, it sets the stage for the price to move higher. We look at the ETF fact sheet. We look at the companies that are in this sector. We stopped at 5, but you can go through the whole thing. These are just the top 10. You can download the entire thing. The idea is if the sector is going to break out, there are going to be stocks within that sector that are going to break out by a bigger percentage than others. And based on just what we looked at, if I look at NextEra Energy, out of the 5 stocks we looked at, this one looks to me like it's got the most potential for a rapid upside because when we make fast moves through levels one way, we reverse when we go back the other way, we tend to make fast moves back through those levels. All right, everybody, thank you so much, and I hope to see you soon.